pipeline sector has had a strong start to 2019, up over 20% in the first quarter. But we're still 30% or more off the highs of 2014, almost 5 years since MLPs made their high. Now, many of you know from our writing, from webinars we've done on our blog, that a lot of the issue has been companies having to redirect cash from distributions to pay for growth. We analyzed our index, the American Energy Independence Index, which is the most representative index of North American midstream energy infrastructure, with all of the biggest companies, American and Canadian, some big MLPs, mostly big corporations. And we looked at the cash flows on a bottom-up basis. And there's a lot of good news here. Distributable cash flow, which is the cash that's generated from existing assets, is growing, partly because projects that have been in production or under construction, I should say, are going into production. On top of that, CapEx numbers are coming down. We're over the hump in terms of investment in new projects. The result is, when you combine these two, the free cash flow is absolutely taking off. Around $1 billion of free cash flow for the industry in 2018, a pretty low number for a sector that's $500 billion in market cap. We see that growing to $45 billion over the next 3 years. This chart shows the bridge each year from free cash flow for the year, and then the change in distributable cash flow and growth CapEx to get us to the higher free cash flow number for the following year. It's really a pipeline cash gusher, and is one of the reasons that we feel so bullish on the sector in the next couple of years. This free cash flow is going to support increased dividends and more buybacks, and is just good news for investors. I'm Simon Leck. We invest in energy infrastructure.